RNZ National. It's time to catch up with our personal finance expert, Mary Holm, who joins me now. Hi, Mary.
Hi, Jesse.
Well, big news last week. Well, not surprising news probably, but big news nonetheless. Rates, well, the OCR at least, seems to have peaked and seems to be coming down again. And there'll be lots of mortgage holders, about a third of New Zealanders with mortgages apparently, who'll be celebrating.
Yeah, indeed. I mean, we're not today going to talk about the poor people with bank term deposits who are, of course, not as happy. They've had a good run for a few years, so so perhaps it's the turn of the people with mortgages.
Yeah. I'll try not to cast a vote for that one. But yes, it does tend to dominate your life, whether you're a saver or a mortgage payer or indeed a renter.
Yes, yeah, and especially given how volatile interest rates have been in recent years. You know, I was just looking at a graph. There was a huge drop in interest rates back in, it was middle of 2008 to the middle of 2009 with the global financial crisis.
Yeah.
And just out of interest, the one-year mortgage rate dropped from 9.3, which is pretty crippling, back in 2008, down to 5.6 in just 1 year, which was a huge drop. Since then, rates have kind of trickled along, dropping somewhat until about 2021. You know, so they trickled along, and then, as many of us know, they suddenly soared again.
Yeah.
So there's a really interesting graph on the Reserve Bank website that shows mortgage interest rates, and you know there've been dramatic changes. But so finally, from 2021, when the 1 year rate was 3.2, and in January this year it was up to 7.8. So once again, huge changes, although not as abrupt as in the global financial crisis, but nonetheless, very big rises. But now finally they're coming down, and look, I don't know what the future's going to bring, but it looks as though they're going to come down a fair bit.
How did they ever let them get up to, I'm looking at that graph you mentioned, and the floating rate was almost 11%. How did they ever get that high?
Well, look, as all the boomers who are listening will say, oh, that's nothing. Back when we were young, it was up around 20, and I was one of them. You know, we were paying huge big rates then. And look, the economies were booming, and I mean, I'm not an expert on what causes these rates to go up and down as much as that. I mean, a lot of it is the Reserve Bank making decisions. But that's based on what's going on in the economy in terms of inflation and economic growth and all these other factors that are going on. But the point is that now that mortgage rates are falling, it's a really great opportunity for people with mortgages to make a big difference to their financial future. And that's not by saying, oh, good, I can pay less on my mortgage so I can have a few more dinners out. Although, Jesse, last time we talked about something like this, which was actually 4 weeks ago when we were talking about the tax cuts.
Yeah.
And I remember towards the end of that session, you had a business, I think a restaurant owner, somebody like that, or maybe a shop owner, texting in and saying, hey, we don't want everybody to save their tax cuts. We want them to spend and keep our businesses going. And look, I have sympathy for that. But at the same time, I would love to see people at least using most of their tax cuts to improve their financial situation and using most of their mortgage rate cuts to improve their financial situation. You know, okay, buy one more dinner a month or something, but in the end, you know, it is a great opportunity for people to make a big difference to how well they do the decades ahead. And
I want to
I
take
mean,
a moment too, Mary, to mention one of your colleagues at the Weekend Herald, Thomas Coughlin, who wrote a really lovely piece, really forensic piece on the weekend, looking at how much people will start to save when interest rates go down. He went through all the numbers, and he's a politics reporter, so his angle was, that people might start feeling a bit better about the government. But 1% on an average mortgage is huge.
yes, it is. You're absolutely right. So haven't yet read all of the Weekend Herald, but I must go back and look at that. Yeah, that's interesting. What I did do was have a look at just one example using the sorted mortgage calculator to see the sort of situation that listeners might be in. So I looked at a $500,000 30-year mortgage, and so the interest rates were dropping from 7.5% to 6.5%, and so currently people are paying $1,613 a fortnight, and that will go down to $1,458. So about $150, or very roughly speaking, less that they have to pay. But the idea is that you go to your lender and say, no, I'm going to keep the current payments going. Or if you want to, maybe say I'll keep the current payments going, but give me 20 more bucks a fortnight to spend on fun or something. But if you keep all or most of the payments going at the old rate, and your mortgage lender should do that at the end of a term, they should be open to a new plan for you. So if you did that, in this one example, you're going to be paying about $175,000 less in interest over the life of your loan. That's $175,000 less over the life of the mortgage. And that's not, I think people look at these things and say, oh, yeah, that sounds good, but it doesn't mean that much, but it actually is real money in terms of...
Are you serious?
How much.
If you keep your payments the same on a $500,000 mortgage,
Yes.
rather than take the money, you save $175,000.
Yes, over the life of the loan on a 30-year mortgage.
Gosh.
Yeah. So it's huge, a huge amount of difference over the years, and what's more, you would pay it back in 23 years instead of 30 years. So that that's another big plus. You're getting the mortgage off your back. People often, of course, in the meantime, trade up to a bigger or better house. So this is assuming you were just staying in the same house. But the point is that the numbers are huge in terms of how much less interest you'd pay and how much faster you'd pay the mortgage off.
Yeah.
And what's more, that's just looking at an interest rate drop from 7.5% to 6.5%. I wouldn't be surprised if rates continue to drop further than that. And so let's say they dropped another 1 percentage point down to 5.5. You'd be saving another $170,000 in interest and paying the loan off in 19 years.
Wow.
Instead of 30. These are assuming that the loan's going to continue for 30 years more from now. It depends on everybody's circumstances, but it's worth having a play with the mortgage calculator on Sorted. There are a whole lot of other mortgage calculators online as well, put out by the banks and so on, and you might choose to use one of those instead. But the point is that the numbers are big, and it is real money for people. It's not just something theoretical.
Yeah.
So,
Acknowledging, as we all always do or try to do, that some people have been finding it extremely tough these last couple of years and will be dying for some sort of relief.
That's totally true. And if, for example, you've run up credit card debt or buy now, pay later debt or something like that, I would absolutely urge you to instead, take on the lower mortgage payments, but use that difference to pay down that debt. That would be number one priority. If you've got that high interest debt sitting around, you've really got to get rid of that. And if you're really struggling, yes, accept that the lower payments and celebrate. But a lot of people might have been unhappy about these higher mortgage rates, and the higher payments that go with them, but they've managed. And if you can just keep those payments up, or most of those extra payments up, it really you'll be so happy 10 or 20 years from now, because you'll be that much better off.
Yeah. Nice one.
Yeah.
We've got an email which is sort of on topic, Mary. Comes from Sam. He says, Kia ora, Mary. I wanted to say thanks again for making financial literacy and education so accessible. You get loads like that. We don't read all of them out on the radio, but that's the tip of the iceberg. Now, after listening to your piece on RNZ Afternoons about doing something with the upcoming tax cuts, I increased my fortnightly mortgage payments by 10%. That's the max I can do without penalty until I come off the fixed term. My initial thought was, $40 a fortnight, it's not a lot for me, I'll just see what happens, and I probably would have just spent it on more coffee or something, but instead I've taken a deliberate step in the direction of paying off my mortgage debt faster. And P.S., I've just done the sorted calculator, and it should knock about 3.5 years off my mortgage just by paying that $40 a fortnight.
Yeah, isn't that neat? And so he was kind of combining what we were talking about 4 weeks ago about making use of the tax cuts and combining with what we were talking about today, because I said back then, look, if you make use of the tax cuts to pay down high interest debt or set up an emergency fund, and Sam's done another really good thing, which is step in and increase the payments off his mortgage. And by the way, note that he says, so he's on obviously fixed term mortgage, and he was allowed to increase the payments by 10% without a penalty until he came to the end of his term. And that's something for listeners to think about. If you're on a fixed term mortgage, and most people are on 6 months, 1 year, 2 year, 3 year, etc., you're not allowed usually to pay a lot more off it until the end of the term. But you often can pay some off, and that's what Sam's done. He went and asked them, how much can I pay off without any penalty? And they said $40 a fortnight. So that's sort of something people can be getting on with in the meantime to use their tax cut. But then when the mortgage term ends, then the bank or other lender will be coming in and saying, okay, now the amount you have to pay me is going down by X per week, fortnight, month, whatever. And at that point you can probably make an even bigger impact on the mortgage. But yeah, so it's all, I hope I haven't confused people. There's these two good things happening, the tax cuts and the mortgage rate cuts. And people can cash in on both of those to really help their long-term financial situation.
You made a lot of sense, and as always, it's much appreciated. And Sam's email is proof that people actually do listen and will act on it. So thank you, Mary.
Pleasure, Jesse.
Mary Holm on how to deal with what look to be falling mortgage rates. If you missed the start of the conversation, it'll be up online for you to listen to momentarily.